Hey guys, my name is Kevin Steele. I'm a fractional CFO, qualified chartered accountant with over 15 years of experience. In this video, we're going to speak about one of everybody's favorite topics, investment. And in terms of investment, there is two key things that investors are always going to be looking for. Number one is clean financials. Number two is a data room. So let's start with number one, clean financials. When I first start working with a client, the first month of every month is cleaning up the financials, the historical data. We need to arrange that data in a way that makes sense, both from a business perspective and from an investor perspective. Once we have our data clean, then we need to start building our forecast. If you remember in the intro, an investor is interested in the potential of your business. That's what they are buying, the future potential of your business. So what we need to do is we need to set up something called a three-way forecast, which forecasts profit and loss, balance sheet, and cash flow all at once. And we need that time horizon to be initially 1 year, then expanded to 2 years, expanded again to 3 years, and depending on the investor, we may even need to make a 5-year forecast. So a hell of a lot of planning goes into that process. We need to think about revenue. We need to think about direct costs. We need to think about indirect costs. We need to think about capital expenditure. We need to think about taxation, etc., etc., etc. There's so much thought that goes into building this kind of model, and this is what any sophisticated investor would expect to see. A three-way forecast that maps out the journey of your business over the next 1 to 5 years, because remember, they are buying the future potential of your business. So getting that in place is super, super, super important. The other key thing we need to have in place is something called a data room. So what is a data room? A data room is a central repository of all the key information in your business, generally uploaded to a secure Google Drive, secure Dropbox, that kind of thing. So imagine you're the investor, you're looking at buying a company. You want to be able to go into one portal where you can see everything about that company. You want to be able to see the financials, you want to see the insurance documents, you want to see the contracts of the major customers, you want to see any of the major staff contracts, etc. You want to just be able to go in there and do a deep dive in that company. And a data room can take a long time to put together. This isn't the kind of thing you can put together in a couple of days. This is a long process. And the sooner you get started on building this data room, the better, because there is one thing that kills investment, and that one thing is called time. The longer it takes for an investor to learn about your business and to kind of really get under the weeds and ask questions and understand your financials and understand the risks, rewards, opportunities, the less chance you have of securing that investment. So having a data room, extremely important. And linking back, just come back to our financials for a second. We also don't just want a three-way forecast, we want scenarios. So we want best case, medium case, worst case. We want to give the investor as much confidence as possible that we have thought about the performance of our business, and we can present them different cases because that increases their confidence in our ability and our understanding of the business. So two key things, three-way forecast, data room. That will get you a long way at the start of the investor process. Remember, it's all about making it as easy as possible for the investor so they do not need to spend lots of time asking for information here. Oh, could you please send that? Oh, you're missing that. Can we please send that? That kind of thing can extend the overall life of the investment cycle by sometimes even 2 months, sometimes even 3 months. So having your shit together is absolutely key. So let's run through an example of what a forward-looking credible forecast would look like. So we've used our friend Claude here to build a demo company for example purposes. And on this here, we have different scenarios. So you can see in this key model here, we have one tab for all scenarios. We have just a conservative scenario, a best case scenario, and an optimistic scenario. Any investor will want to see this. They want to gauge their level of risk in terms of the company and what they're looking at. So scenario planning is always a really, really good idea. So let's run through the optimistic scenario here. So what we're saying is the optimistic scenario for this company, Meridian Advisory Group, year 3 revenue, 5.5 million, EBITDA margin, 26%, gross profit margin year 3, 62%, and closing cash at year 3, 2.09. Investors are not only interested in your revenue, they're interested in your profit margins, and they're also interested in the cash balance. And this gives a revenue growth per scenario, so you can see a comparison. Year 1, conservative, best case, optimistic, year 2 the same, and then year 3 the same. And you can see there in year 3 the difference between the conservative and the optimistic. As the investors come in, put some capital into the business, the best case is that capital is allocated in a way that will increase the revenue performance of the business. So that's why you can see there such a big jump from a conservative to an optimistic there. And then we have a fancy little graph here showing our EBITDA margin trajectory. Graphs and visualizations, always good because they make it as easy as possible for the investor to see things, so they don't need to dig into like lots of spreadsheets and detail, although you should always provide the spreadsheets and as much kind of core data backup as possible. And again, gross profit, same idea, nice little visualization. We hover over, we can see what the different outcomes are in the optimistic, the best case and the conservative. Same for cash flow. Again, just to reiterate, your revenue number is not what the investor is buying. They're buying profitability and they're buying cash flow. And there's another profitability there. And then again, nice little margin profile showing EBITDA on conservative, best case, optimistic. And then a kind of breakdown of the key line items: revenue, cost of sales, gross profit, EBITDA, etc. We would also have a backup version of this where revenue, that might have 15, 20 lines under it. But if we're kind of at the early stages of the investment process, then step 1 is the investors, they want to see that broad overview of the business and its potential. Once we maybe get to the middle to end stages, that's when they're going to be looking at what exactly makes up revenue, what percentage of that revenue is recurring, what percentage of that revenue is non-recurring, what percentage of that revenue is tied to contracts that might run out soon, etc., etc. And same applies to costs and everything else. So early stages, broad overview, then the medium to end is where we really send the detailed mega Excel files with a breakdown of absolutely everything. And the data room also gets scrutinized in a lot more detail. And then the assumptions behind our scenarios, we need to know what actually is driving them. So we can see here in the conservative, 12%. Revenue growth, best case is 28 and optimistic is 52, etc., etc., etc. And then we can see how the cash works across the different scenarios and importantly, the closing cash balance for the company year by year. So presenting this kind of thing at the start, imagine you were an investor and you're looking to invest in a company and you saw this kind of thing, you'd be like, okay, great. This business has really thought about things. They planned out their profits, they planned out their cash position, they planned out their margins, they've given us different scenarios. You know, that's a really good sign for an investor. It shows you prepared, it shows you ready. And if you've got a data room to back that up on day one, then the investor is going to have a lot more confidence in your business and you as the founder/owner. So this video was all about what investors are actually looking for. But here's the thing, I've been on this journey multiple times and what the business owner thinks the business is worth and what the investor is willing to pay is often a very different figure. So in the next video, we're going to speak about valuation and we're going to speak about the things you can implement today to increase the valuation of your business before you seek investment. So click right here and I'll see you there.